Made a video there this week or last week, and I published it on my YouTube channel, and it's been pretty popular, and it's a video about agricultural relief from capital acquisitions tax. The title of the video is Agricultural Relief, a Valuable Tax Exemption for Capital Acquisitions Tax Law in relation to gifts and inheritances. That video has been very popular, but I wanted just to expand upon and link this video to that video and expand upon who is considered to be a farmer for tax purposes or for capital acquisitions tax purposes. Up to the 1st of January 2015, the test was a purely financial one. The financial test was if the beneficiary's assets, total assets, 80% of them at least comprised agricultural assets, agricultural land, then that person became or qualified as a farmer for capital acquisitions tax purposes. They didn't actually need to be a farmer. They could be an accountant or a solicitor or a barrister or a shop worker or a cleaner. It made no difference whatsoever once they passed the financial test. And the financial test was that 80% at least of their assets, total assets, were agricultural assets. If that was the case, they became or qualified as farmers for the purposes of CAT relief, capital acquisitions tax relief. However, from 1st of January 2015, that changed. There was a new test introduced, a second leg to the test, or a second test, and that is the active farmer test. And that test requires a certain element of activity on behalf of the beneficiary. So the active farmer test is as follows. Broadly speaking, there are three ways to meet the active farmer test. One is that the beneficiary is a trained farmer and farms the land commercially. The second way is the person spends more than half the working week farming the land as an active farmer. So a person could have a job, an off-farm income, and work half of the working week at least as a farmer, and that's, I think, generally considered by revenue as a 40-hour week. So if a person is doing 20 hours a week on the farm, well, then they qualify as a farmer. So spend more than half the working week farming the land as an active farmer, then they're considered to be an active farmer and pass this test as well. Or they could lease, the beneficiary could lease the land to an active farmer who will actively farm the land on a commercial basis, or a trained farmer who will farm the land commercially. So they are the three ways, the three broad ways that you can meet this active farmer test, and that's the second test. That's from the 1st of January 2015. Prior to this, or the other part of the test then, is the 80% test. Does 80% of the beneficiary's assets comprise agricultural assets? If that's the case, they qualify as a farmer. I hope you watch this video in conjunction with the other video, and the other video, I'll remind you, is agricultural relief. It's a valuable tax exemption in capital acquisitions tax law in Ireland in relation to gifts and inheritances. I'm going to put a link up here on my YouTube channel to the first video about agricultural relief in general, and then I'll put a link on that video to this video spelling out precisely who qualifies as a farmer for the purposes of CAT. Hope you find this video useful.